Supernet is the Polygon network's blockchain development platform. It is designed as a scalability solution to help developers create their own blockchain protocols in a cost-efficient way. It offers interoperability, specificity, enhanced scalability, security, and better decentralization. Supernet allows developers to bring their projects online with 3 speedy deployment modes. It has an advanced technical architecture powered by Polygon Edge, trustless operation via Merkle trees, Ethereum virtual machine compatibility, and custom token support. Avalanche's subnet system helps developers build decentralized apps quickly while maintaining the highest security standards. It features the ability to create private blockchains, separation of concerns, and the requirement of validators to stake AVAX tokens before validating built-in chains. Overall, Supernet and Avalanche subnets are 2 scalability solutions that allow developers to deploy or develop app chains quickly and efficiently. Both have their own advantages and disadvantages, so developers should consider their needs and choose the platform that best suits them. Bitcoin has continued to surge, pushing past $28,000, as investors look for a safer bet in cryptos and liquidity remains an issue. The collapse of crypto-friendly banks was supposed to smother crypto. However, the systematic crisis of confidence in the global financial system has rekindled an appetite for risk assets. In Asia, banks are stepping up and providing fiat pipelines for crypto. The question is, how long will this rally last? The recent surge is a flight to quality almost parallel to what you would see in traditional markets during a time of crisis. Investors move out of stablecoins and into Bitcoin. Liquidity is also a factor, as transfer volume, active addresses, and transactions are all down. The Bank Term Funding Program has flooded the market with liquidity, and risk appetite may recover with the Fed pivoting on inflation. This article provides a thorough overview of the recent surge in Bitcoin's price and the recent banking troubles that have pushed investors to seek out safer bets in cryptos. In Asia, banks are not as affected by the banking crisis as they are in the US, although it remains uncertain if banks are going to step in and try to fill the gap. It also covers the impact of the Bank Term Funding Program and its effect on liquidity and risk appetite. Finally, it discusses how the recent events point to a flight to quality in the crypto market, with investors preferring Bitcoin over US dollar stablecoins. Overall, the article offers a comprehensive look at the current state of the crypto market. The US Federal Reserve has announced it is joining hands with other major central banks. They aim to ensure a steady flow of the US dollar, a dominant reserve currency, in the global financial system. This move is designed to reduce exchange rate volatility and prevent strains in the supply of credit to households and businesses worldwide. It raises questions about the Fed's ability to keep increasing rates. It also reduces the risk of a worldwide dash for cash during times of economic turmoil. These dollar swap lines have been bearish for the dollar in the past. This can lead to positive outcomes for risk assets such as cryptocurrencies. This article provides a comprehensive overview of the US Federal Reserve's recent decision to increase the frequency of its dollar swap lines with other major central banks. The move is intended to ensure a steady flow of the US dollar in the global financial system and to calm exchange rate volatility. Furthermore, it may reduce the risk of a worldwide dash for cash, where investors sell risk assets, such as cryptocurrencies, and move to cash, primarily the US dollar. The article also highlights the potential implications of the Fed's decision and its past effects on the dollar, risk assets, and cryptocurrencies. Overall, this article presents an insightful analysis of the Fed's recent decision and its potential effects on global financial markets. For the first time in 2 years, the implied volatility index for Bitcoin is greater than the index for Ether. This suggests the market is focusing on macroeconomic issues and viewing Bitcoin as a haven investment. Bitcoin's dominance rate has increased to nearly 48%, while Ether's has declined to 19%. Sophisticated traders may buy options when the implied volatility is low and sell when it is high. The ETH-BTC4 spread could increase, boosting the value of Ether options relative to Bitcoin. This article outlines an interesting development in the cryptocurrency options market, where traders are predicting Bitcoin to be more volatile than Ethereum. This is unusual, as ETH and other alternative cryptocurrencies generally tend to be more volatile than Bitcoin. It is reflective of a market focused on macroeconomic issues, and Bitcoin's dominance rate has increased to nearly 48%. Meanwhile, Ether's dominance rate has declined about 1 percentage point to 19%. The article further explains that implied volatility is mean reverting, so sophisticated traders buy options or volatility futures when the implied volatility is unusually low and sell when it is exceptionally high. All of this could mean that the ETH-BTC4 spread could bounce back into the positive, boosting the value of Ether options relative to Bitcoin. This article provides an insightful look into the current state of the cryptocurrency market. At the Blockchain Africa conference in Johannesburg, South Africa, speakers discussed the potential of Bitcoin. Additionally, they discussed how stablecoins could drive crypto mass adoption in Africa. It was suggested that Bitcoin could become a regional currency or even a common currency across the African Union within the next decade. It was also suggested that stablecoins could be the biggest disruption to the banking system, potentially replacing it altogether. Attendee Maya Cadell pointed out that Africa's population is expected to double by 2050, with 1 in 3 youths globally being African. Services such as M-Pesa are already providing payments, credit and savings. However, mobile money does not have the global interoperability of assets like stablecoins and Bitcoin. This article explores the potential mass adoption of crypto, in particular Bitcoin and stablecoins, in Africa in the coming years. According to speakers at the Blockchain Africa conference in Johannesburg, South Africa, Bitcoin and stablecoins may become legal tender in the Central African Republic and other neighboring countries, as well as a common currency across the African Union. The growth of the African population, the success of mobile money, and the global interoperability of assets like stablecoins and Bitcoin make these solutions especially attractive. Ultimately, stablecoins could potentially replace the banking system altogether. Ethereum Classic concluded a bullish week and saw an increase in its total value locked after experiencing outflows in February. Despite the improvement, Ethereum Classic's TVL is still far behind Ethereum's impressive $28.93 billion TVL. The Swap decentralized exchange currently accounts for most of Ethereum Classic's TVL. Recently, it contributed a peak of $236,928 after a 42.87% surge in the last 7 days. Etcetera's price has also bounced back by 25% from its weekly low to its weekly high and 40% from its current monthly low. The weighted sentiment metrics remain high and Ethereum Classic's total NFT trades volume has also seen a surge in the last few days. However, Ethereum Classic's development activity has shown signs of weakness during the weekend. This article evaluates the current state of Ethereum Classic in the DeFi market and the NFT sector. It looks at the total value locked, which saw an increase in the last week, and Swap as the major protocol contributing to the network's TVL. It also examines the current price volatility, sentiment metrics and development activity. The article concludes that while there are positive indicators for Ethereum Classic, further analysis is needed to determine whether the rally will continue for the next few days. David Schwartz, the Chief Technology Officer of Ripple Labs and one of the co-founders of XRPL, tweeted that any individual who keeps uninsured funds on deposit with an insolvent bank is not bright and should withdraw their money. He also tweeted that the bankruptcy of SVB and Signature Bank will not disrupt Ripple's operations. Robert Kiyosaki, a prominent investor and financial expert, has been warning of an upcoming financial crisis since early 2020. He is advocating for the acquisition of Bitcoin, physical gold, and silver coins. The bankruptcy of these two banks is seen as a factor in the recent surge of Bitcoin to a $28,000 level. This article provides a detailed overview of the recent SVB case, as well as the opinion of Ripple's Chief Technology Officer David Schwartz regarding the case. Additionally, it discusses the opinion of prominent investor and financial expert Robert Kiyosaki, who has been warning of an upcoming financial crisis since early 2020. Ultimately, it provides insight into how Bitcoin price has been propelled to the $28,000 level as investors have been turning to the digital currency during times of instability in the banking sector. Bitcoin prices recently surpassed $28,000, but traders remain unenthusiastic as there are concerns that the banking crisis could worsen. The U.S. Federal Reserve has responded by providing emergency funds to banks. Investors continue to hoard cash or short-term government debt instruments. Analysis of derivatives metrics shows that professional traders are not bullish above $26,000. This indicates that the potential for Bitcoin to exceed $30,000 is remote. This article provides a comprehensive overview of the current state of the Bitcoin market and the global banking system. It offers a detailed analysis of the recent rescue of Credit Suisse and the emergency credit lifeline provided by the U.S. Treasury. Additionally, it examines the yield on 6-month U.S. Treasuries and 2 derivatives metrics to determine the current market position of professional traders. Based on the analysis, it is clear that traders are not very bullish above $26,000 and the chances of Bitcoin surpassing $30,000 remain extremely remote.